All right, traders, this is Christian from Hertz Tribeca Trade Group, and this is your recap for Tuesday, April 3rd. And I had up a chart of XLE. I'll get to energy stocks in a minute, but let's start with the S&P as usual. We did retake the 200-day moving average today. Bunch of balloons dropped on everybody. No, I'm just kidding. Yeah, I mean, a little bit of a clawback today. Very, again, headline-driven market. A lot of headlines about Amazon one at the end of the day, which really caused the VIX to sell off pretty hard, and Amazon and some tech shares to rally. Who knows what's what's going on? I think the market is rallying just any good news, whether it's a false White House headline or not about investigating Amazon or going after Amazon. I think at this point we've gotten the sentiment is so bad at this point that and we're really fluctuating on headlines pretty heavily right now. So that said, where are we? Well, just basically kind of looks like almost an inside day. We did not take out the open or anything. Nice to see us come back and reclaim the 200-day moving average. But I think this market right now is a one day at a time situation. So just above the 200-day moving average, but really, that's the only positive that I really see. We did not get back into value. We did not retake any short-term moving averages. You can see this yellow line on my chart, which is the 5-period exponential moving average. We did not retake that. So, so I think again you really have to analyze things by case situation, define your risk. I did send out a video today. I put that as well, that free video on Twitter as well, just to kind of give you an idea of what type of trades that we're looking at doing here. Regardless of like this really not showing much confirmation today, I think things have gotten to a certain point where they look attractive to take some shots here and there. Again, as long as you're defining your risk. I did these options. I structured them as limited risk reversals, taking advantage of the heightened volatility on one side, one leg of the trade, selling a put spread. So again, these are structures that we put together all the time, and you can visit us at tribecatradegroup.com, and we're going to change our strategy with what the market gives us, and that's what we're doing right now. And I think we've got some pretty nice trades, and we'll continue to do that. And I think it's going to be a good opportunity, going forward the next couple of weeks. You just have to kind of get through this. The sellers do still have control of this market. It does feel like every time we rally, to me it feels like a short covering rally where shorts are scrambling to cover a little bit. It doesn't look like there's much new money being put to work. That was evidenced by yesterday. The first day of the month flows showed $4 billion in outflows out of equity, specifically U.S. ETFs. So money is continuing to be unwound, but it looks like a couple buyers stepped in a little bit in some options today. So it's going to be a process. It's going to be a bottoming process. I'm not trying to make any predictions, but I just don't think it's going to be a one-day event where we get back into the uptrend and then all is fine. I think it's just going to be a process at this point. So. So that's that. That's a little market overview. Qs, I mean, these were just all over the place today. A lot of chop and good to see us finish close to the highs. You could see another kind of funky looking candle today, kind of a hammer bar. Not exactly a true hammer, but you could see just back and forth all day today. And as really kind of a tug of war between buyers and sellers. And again, I think this on that headline, that Amazon headline is short covering. So that's what it is. It is what it is for now. Best performing sectors today had some different sectors outperform. The airlines were actually up pretty decently. Just a lot of beaten down groups. Energy, which I was just going to talk about, had a nice day today. But I'll tell you, this energy trade has been very, very difficult this year, very difficult to time. And you look at this chart. Don't let anybody fool you when they say they've had a great time trading energy. It has really been a difficult a difficult trade as I'm trying to bring up the XLE trade. But that's, as I'm bringing this chart up, and Thinkorswim is thinking, been one of those another just testament to how hard this market has been to trade overall. Because while tech has been going down, and while the overall market has been going down, there really hasn't been much areas that have performing. You would think that eventually money would be flowing back into energy on the dip here, and it's really not. Again, nice candle today. We do see some call buyers every once in a while, a couple MLP names like ETP, but there's just not a lot of things that are outperforming. And again, sometimes in a defensive tape, you have those consumer staples. Utilities I think have outperformed a little bit, but just really those safety places are just kind of just tells you that you can't really hide in this market other than just being in cash. So it's been particularly tricky, and I mentioned this earlier in the trading room that even these names that have underperformed, they caught a bid for like 1 or 2 days and they got squashed yesterday. So you really can't hide in some of these underperformers, thinking that they're going to get a bid just on valuation. I mean, look at XLU, not anywhere. Maybe it eventually will get back to the 200-day moving average, but this isn't a place to either hide either in this market. So what else today? Semis came back. Semis at one point were up, I think, 2%, went to flat, and then back up 1.8%. So pretty volatile markets going on. My strategy is, I went over this in the previous video where I talked about the trades that I put on today. I think taking some shots at things and then just being ready to hedge whenever the volatility, whenever the VIX and the VXN start to move up a little bit. You've got Qs puts and SPY puts that are super liquid. That you could trade, and that's part of my strategy and part of what I'm doing right now. All right, so some option activity. A couple things like this today. Short squeeze type trades. I think. Looking for a squeeze in these types of things. But there were some other things that were, I think, a little bit noteworthy. Microsoft, it looks like they may have added to a June 55 call position. There was a really nice SPY order. You can see I've got SPY up here on the left of the screen. We've been seeing a lot of this stuff, right? A lot of puts that have been going up. I mean, that's a December 2019 put order all the way down to what, 165. But it's been a lot of not exactly that order, which goes out far and is way far out of the money. But it's been much more. Index puts we've been seeing on the tape. Yeah, it's more like this, I should say. Just rapid fire over the last week. Take a look at this trade. This is unusual. Nice SPY call flow. This is the April 27 260 calls. That again, I usually don't pay too much attention to SPY other than just noting the frequency of how many puts they're buying. Same thing with the Qs. But it's kind of interesting when someone actually goes the other way and buys a little bit of calls. So that's a nice looking trade. That's a $3.3 million trade. So maybe that's an indicator that, again, somebody's finally buying, taking a shot here and thinking that we've gone far enough. And that's kind of what I feel is the overall call volume today, or some of the trades that you're looking at right in front of you. Just kind of the feel on today. Like DHI has been another one. We went over this one in the trading room that, hey, these are the things that you might want to be looking for. A name that's really gotten beaten up, a sector that's really gotten beat up, the home builders, and they keep coming in to buy DHI on the dip. And they've been adding to this January position. And again, notice that they're not going out for like a month. They're not going to weeklies. They're not going to front month. They're going all the way out to January. So, they probably are thinking, again, I don't know what they're thinking, but I could try to relate and say, hey, maybe this volatility goes on for a couple more weeks, for even a couple more months. But maybe they're thinking that probably this resolves itself, and this thing at least gets back to, maybe not all the way here, but they're just buying the 45 calls. So maybe it gets back into here someplace by January. I think that seems reasonable, doesn't it? Keep in mind the premium is 370 on those, so you really have to add that to the strike. So you're looking at 48, 49, but still, January, I think anything could happen by January. I think this could even get back to the 52-week high by January. So I think that's more of a smart order, and just a testament to the fact that there are some dip buyers out there, and you could see the open interest, which just increased today. It was 10,000 going into going into yesterday. They bought 10,000 yesterday. Open interest now 21. I would think open interest will now jump to 25 tomorrow, but I will double check that. A couple other trades. Interesting Twilio trade going all the way up to January 2020. So again, people taking shots, but a little bit longer. I think that's more higher quality flow. Thinking that this volatility could last for a little bit while longer. A couple, I've mentioned in yesterday's recap too, a couple shots in some of the biotech names. Sarepta, that's been a name that we've seen a couple times. I think on Friday was the first time that we saw Sarepta again after a move from whoops, that's support.com, SRPT. Is Sarepta. You can see this chart. We saw a whole bunch of call buying on this big move. It's gone from 84 down to 72, and you see call buyers coming back in. Nice looking Regeneron trade today too. Short dated. This was a longer dated trade. There's November 70 calls in Sarepta. Now we saw, I think on Friday we saw some shorter dated ones, not quite far out as November, but Regeneron was pretty short. A very close time frame. These were the April 340 strike calls going up for 720. So it's a nice trade, and it's that's a $300,000 premium trade, and yeah, I think that's one of the best looking trades of the day. Unfortunately, it's a lot of premium. One of the things that I suggested not suggested but mentioned in the trading room today is that you could make this into a call spread, about a $10 wide call spread for about 320. When I mentioned that, DXC, this is another name that we've been seeing some call activity in. This is a smaller cloud name. They've been buying the dip in this one a couple times now on this trip down, or on this swing down. They've been buying calls. A few other names. I thought this was interesting, unusual, not a big trade at all, but ACWI. That's basically global equity ETF. They bought some of those as well. All right, so that's it for today's recap. But I think as long as you're defining your risk, and you could view the video that I sent out earlier. You could view that on my Twitter page, and you could see some of the trades that I put on. You could see that for free. All right, guys, thanks for watching, and have a great night.